Hi, my name is Nicole. Welcome to my channel, Travel to Money. In this video, I will tell you about how I jump-started my investment portfolio during the uncertainty of COVID. I'll tell you about my first stock investments and how easy it is to open your own investment account. Plus, I'll tell you about how I've arranged my investments now that I've gotten serious about investing. If you are new here, I have created this channel to help you learn about how to travel, adventure, and have fun on the road to financial independence. I have traveled the world both solo and duo. I paid off a house in Spain, plus I have worked smarter and harder to help me move toward financial independence. I believe that the road to financial freedom can and should be fun. I hope that you'll subscribe and join me on this journey, no matter where you are starting from. I watch other people on YouTube who have reached financial independence, and yes, they are inspiring. But sometimes it is a little disheartening to me when I realize that in their regular job they were making over $100,000 per year. I don't know about you, but that's just not relatable to me. A single salary for me has never been much more than half of that. As I would do the math, I needed to figure out how to make bigger chunks of money without reinventing my whole career. Renting out my first house on Airbnb was the first way that I had almost a full second income. I've also worked 2 full-time jobs during COVID since I wasn't able to travel. So now I had the bigger income coming in, and the first thing I did was wipe out my debt. While I was still paying off my debt, I started to look at my investment account. I had around $6,000 in a mutual fund that I never really touched or looked at. I had always heard things about buying when stocks are low and selling when stocks are high, but I had never really messed with the stock market before. I wasn't even entirely sure how it worked. After the first wave of COVID hit, you might remember that the stock market took a nosedive, especially the stocks of travel companies as the world began to slow to a halt. I remember my dad telling me that Carnival Cruise Line had dropped to around $17 or $18 per share. Carnival Cruise Line stock used to sell for as high as $71 per share in early 2018. Of course, everyone was in a panic and selling off stock, especially stock like Carnival. What I saw, thanks to discussions with my dad, was an opportunity. While everyone else was running out of the stock market, that was the best time for me to run into it. Most people you may watch who talk about financial independence are probably going to tell you not to get into buying individual stocks, a sentiment I generally share. This is your friendly reminder that I am not a financial advisor, and you should always do your own research before investing. What I am going to say is that even though it's good to have guidelines, like not generally buying individual stocks, I also think it's crazy to miss out on big opportunities when they present themselves. And Carnival stock hitting below $15 was a big opportunity I just couldn't miss out on. I bought my first set of shares at somewhere between $12 and $14 per share. Then I watched as the price began to get lower and dropped below $10 a share. Other people might panic in this situation. They buy a cheap investment and see it lose money right away. It can be tempting at that point to sell and try to save at least some of your money. But instead of panicking and selling the stock for even less than what I purchased it for, now I was saying, wow, if I thought $12 was a deal, now the stock is $8 per share, so I should buy more. And that's exactly what I did. I ended up spending around $3,000 total and bought 334 shares of Carnival. I wasn't trying to time the market, but as it turns out, the $8 shares I purchased were at the bottom of the dip, which worked out marvelously well for me. I watched that stock hit highs of over $30 and drop back down again during more waves of COVID. I ended up selling all of my Carnival stock for over $22 per share in July of 2021, walking away with $7,600, which more than doubled what I purchased it for. Is every individual stock story like this? No, not even close. Buying individual stocks can be very risky and is very close to gambling. The thing to know about me is I do have a bit of risk tolerance and I absolutely love to find a good deal. Things like COVID that make the market come crashing down don't happen every day, so you won't find me buying up stocks like Carnival very often. Now, I could have held on to Carnival for the long run, hoping that in a few years it would see big numbers like 40, 50, 60, or even $70 per share. But I'm not trying to be greedy and risk the money that I already doubled. For me, it was time to take that money that I had doubled and let it work for me in some ETF stocks like the S&P 500. I'm so glad that I made that investment in Carnival when I did. Not just because I doubled my money, but because I took a scary step and I learned how to buy and sell stocks. I learned so much during that time, and now that is knowledge I can share with you. You might be wondering how to even start an investment account. And similar to where I was, you may be wondering what kind of account to start and what all these crazy terms mean, like bear market, bull market, ETF, mutual funds, and things like that. Trust me, the lingo sounds more intimidating than it really is. Do you know how to access your checking account online? Do you know how to download a game like Candy Crush or Pokemon? Then you can open an investment account. It really is that easy. You'll notice that a lot of people on YouTube will recommend different investment products because they are affiliated with them. I'm just going to tell you who I use and why I like them. I don't get anything for this, and I think I can help you keep it simple. Initially, my investment account was with USAA, but they sold their investment branch to Charles Schwab, who then took over the account. As it turns out, Charles Schwab is one of the best in the business. It's free to open an account. There is no minimum, so you don't even have to put money into it when you open it. Plus, when you buy or sell stocks, they don't charge you a fee. Honestly, they are legit, and navigating my account with them has been easy. Again, I don't get anything for telling you that I think they're good. I just use them myself, and I think that it's hard to beat what they offer. You could literally pause this video and have your very own investment account open within minutes. All you need is your social security number, driver's license, employer's name and address, and you'll also need your bank account information if you're going to transfer money to fund your account. That's it. Word to the wise, be sure to list your beneficiaries once you have money in the account. Basically, it's just letting them know who the money should go to if anything were to happen to you. Okay, now that we've gone over how to open an investment account, you might be wondering what kind of account you should have. There are a few different kinds of accounts, and generally, there is a right order to do them in. Remember how I said I would tell you how I have my account set up? Well, this is what my accounts look like. First, I have a 401k, and this account is through my employer. If your employer offers a match with a 401k account, this is the first investment account you should open. Contact the HR department of your employer and find out how to get started. The first thing you want to do is max out the match that your employer offers. If they will match 2%, then you put 2% of your salary in to get the free 2% that they offer. It is literally free money. Now, keep in mind that a 401k is a retirement account, so you can't just take the money out from it whenever you want. This is money you put in and you let it grow. The other cool thing about a 401k is that the money you put in won't be taxed until you withdraw it in your retirement. So your employer will have it deducted before you are taxed, which is a benefit to you. My second account is my Roth IRA account. This is one of the accounts I have with my Charles Schwab account. You know how you can have a bank account with your bank, but within it you might have both a checking and a savings account? This is like the same thing. Within my Charles Schwab account, my first account type is a Roth IRA. You can put up to $6,000 in this account per year. The dollars you put in are from money that you've already paid taxes on, but the really cool thing about a Roth IRA is that the money growth is tax-free in retirement. This is a big deal, which is why it is the second thing you do, coming right after getting your 401k match from your employer. Okay, so once you've taken care of getting your 401k match from your employer and you've opened a Roth IRA and you've put $6,000 into it, Now you want to go back to your 401k and invest more of your salary in it. In the past, you have been allowed to invest up to $19,500 per year in your 401k, and in 2022, you will now be allowed to invest up to $20,500. If you haven't reached that max, then at this point, you really have no need of opening any other kind of investment account. It may take a while before you can afford to max out your $6,000 Roth IRA and also max out your $20,500 401k every year. That's okay. Start somewhere and build. For me, because I've been able to work 2 full-time jobs during COVID, this has allowed me to max out those accounts during this time. So then I have a regular brokerage account type with my Charles Schwab account. This is where I put anything additional after I have maxed out those other accounts. There are no tax benefits to this regular brokerage type of account, and you can actually withdraw money from this without penalty because it's not a retirement account. Now, these are just the basics and the easiest way to keep it simple. 401k match, then max out your Roth IRA, then go back and max out your 401k, and then open a regular brokerage account. Now, there are other types of accounts that certain people qualify for, like health savings accounts, governmental accounts, and other things like that that would be beneficial to add to your plan if you qualify. I don't qualify for those, and I don't necessarily think the majority of people do, which is why I'm not covering those options in this video. Remember, this breakdown is how I have my investments sorted currently and will be a good starting point for most individuals. If you have questions about specific things pertaining to your situation, please let me know in the comments and I will do whatever I can to help. I'd also love to know where each of you are at in your investment journey. Let me know if you have a 401k and if you've opened your own investment account as well, like a Roth IRA or another kind of brokerage account. I would really love to have an idea of who the audience is and what level of investing you are currently at. I hope this video has helped you in some way, and I would appreciate it so much if you would hit that like button, and even better, if you subscribe to join me on this journey where travel and adventure build financial freedom. I can't wait to see where your dreams will take you. And your investment accounts. Go open an investment account. Go do it. You can do it.